Reaching a point where you no longer have to worry about money is a common goal for everyone. And by this, I don't mean dying as the only way to achieve this. You can attain financial freedom while you're alive, which means having the ability to get whatever you want without constantly worrying about calculations. The key lies in making money work for you by strategically investing in areas that yield significant returns. While risks are involved, such as buying the wrong stocks or getting caught up in the market excitement, consistently investing in a diversified portfolio over the years, particularly in a cross-section of America, can lead to unparalleled results. In this video, I will be sharing some recommended areas where you should consider putting your money into achieving that state of financial freedom. During one of his interviews, Warren Buffett, the CEO and chairman of Berkshire Hathaway, and a billionaire with a net worth of $100 billion, made a thought-provoking statement. He challenged the notion that cash is the ultimate king, stating that assets and investments hold greater importance. This perspective stems from the recognition that inflation impacts all currencies globally. What a dollar could buy 8 years ago now requires at least $20. Therefore, Buffett suggests a wiser approach, and that is converting cash into assets that maintain profitability over time. Buffett advises individuals to invest in assets that generate income. Rather than opting for non-productive assets like gold, he advocates for productive assets that earn money and reinvests and pays dividends or purchase stock. This strategy can multiply the value of your investment by over 100 times compared to non-productive assets. Buffett emphasizes investing in assets based on their ability to generate cash flow, rather than solely relying on speculative expectations of increased value in the future. While speculating on value isn't inherently wrong, it does not align with Buffett's optimal investment philosophy. Buffett prefers investing in assets with long-term outperformance potential, such as stocks, instead of fixed income assets like bonds. He favors tangible assets like farms, businesses, hospitals, and other entities capable of generating substantial returns. If you're interested in investing using Buffett's approach, here are some tips to consider. Firstly, Buffett doesn't follow the crowd when it comes to buying and selling. Instead of buying when others are buying, he does the opposite and buys when others are selling. This contrarian approach can often lead to profitable investment opportunities. Secondly, adopt a long-term mindset when investing. Avoid seeking quick gains and focus on the long-term potential of your investments. Buffett believes that patience is a fundamental trait for equity investors. When the market appears to decline, it can be an opportune time to buy. Think of it as the storm before the calm or the darkness before dawn. By embracing the power of compound growth, you can reap the benefits over time. Thirdly, invest in what you know. To be a successful investor, don't randomly buy stocks based on attractiveness alone. Conduct thorough research and understand the company you are investing in. A solid understanding of a company's business and identifying opportunities within that context is crucial. Continuous learning is also essential. Buffett emphasizes the importance of constantly revising your conclusions and gaining new insights. He famously says, "If you don't keep learning, you're like a one-legged man in an ass-kicking contest." Keep expanding your knowledge and refining your investment strategies. It's worth noting that cash is not always reliable. History has shown us that major American banks' recent failures only reinforce this fact. People are increasingly looking for more secure places to put their money, such as assets and investments. But before we continue, I would like you to share your thoughts in the comments section on whether assets are better investments than buying stocks. Also, if you found this video helpful, give it a thumbs up and share it with your friends. Alright, so let's continue on this investment journey together. Buffett's investment decisions carry significant weight in the stock market, and upcoming and expert investors often find it wise to follow his moves. In this video, I will be mentioning some assets and stocks Buffett has invested in. Amazon. One notable investment is Amazon, the renowned e-commerce and cloud industry giant. Amazon is the world's largest cloud computing provider, with approximately $500 billion in merchandise sales last year. Projections indicate a 9.2% revenue growth in 2023, with even higher growth of 13.9% expected in 2024. Amazon's revenue streams extend beyond e-commerce, encompassing services like Prime, Kindle Unlimited, and other subscription offerings. Additionally, the company earns commissions from third-party sellers on its platform. Given Amazon's potential for further growth, investing in this company is a safe bet. United Rental. Buffett's investment choices also extend to United Rentals, a prominent global industrial and construction equipment rental provider. Despite economic uncertainty, forecasts indicate positive manufacturing, infrastructure, and construction expenditures. United Rentals expressed confidence in its project pipeline and growth prospects by implementing its first dividend in January. Notably, United Rentals is one of the few stocks, alongside T-Mobile, that appears on both Bank of America's growth and value lists. This alignment further highlights the investment potential of United Rentals. Chipotle Mexican Grill. Also, Chipotle Mexican Grill is another investment by Buffett that operates nearly 3,000 quick-service restaurants, serving tacos, burritos, and bowls. Despite increased food and beverage and packaging expenses, Chipotle has managed to balance those rising costs by exercising its pricing power. CEO Brian Nicole explains that while the company may lose some lower-income customers due to price adjustments, it also attracts higher-income households. Chipotle has established a presence in various countries, including the UK, France, Germany, Canada, and the United States. Furthermore, the company has plans to expand further, with at least 255 new eateries expected to launch in the coming year. Paramount Global. Also, Paramount Global, a major entertainment corporation, recently caught Buffett's attention. Buffett's interest in a company often indicates its potential for success. Paramount Global faced mixed earnings reports, as gains in market share for streaming services and the film industry were offset by a decline in television advertising and affiliate subscription fees. However, the company's expansion of international content has contributed to increased subscriber growth across its direct-to-consumer channel, with approximately 67 million active users globally. While advertising continues to impact cash flow, Paramount's long-term potential as a streaming platform and its original content's value is still significantly undervalued. The company is expected to make strong strides in the coming years. When it comes to investing, you don't necessarily need an in-depth understanding of accounting, stock market terminology, or predicting the actions of the Federal Reserve. Warren Buffett emphasizes the importance of having a philosophy you believe in, sticking with it, and avoiding actions outside your area of expertise. Having a clear investment philosophy and understanding the reasons behind your choices are paramount for long-term success. Progressive. Progressive is a prominent auto insurance company in the United States and a motorcycle and commercial auto insurance leader. In the fourth quarter of 2022, Progressive's line segment experienced a yearly increase of 3% in its loss ratio, as reported by Joshua Shanker, an analyst from Bank of America. Despite this, Progressive's strength in the personal auto insurance market stands out, particularly when compared to the mediocre vehicle results of its competitors. Shanker projects a sales growth of 21.5% for Progressive in 2023, indicating an improved outlook for the company. Apple.
Our criteria for Apple is different than the other businesses we own. It just happens to be a better business than any we own. And we put a fair amount of money in it, but we haven't got more money in it than we've got in the railroad. And Apple is a better business. Our railroad is a very good business, but it's not remotely as good as Apple's business.
On the other hand, Apple remains the most valuable publicly traded company, with a market worth of $2.55 trillion. Berkshire Hathaway holds the largest stake in Apple, with approximately 895 million shares valued at $122 billion as of June 30th. This holding accounts for about 41% of Buffett's total holdings at Berkshire Hathaway. Buffett's significant investment in Apple demonstrates a strong vote of confidence from one of the world's wealthiest investors. Charter Communications. Charter Communications and its rival Comcast are one of the major broadband service providers in the United States. Operating under the Spectrum brand, Charter offers internet, TV, mobile, and voice services to over 32 million customers across 41 states. In many of its service regions, Charter has pricing power as it often remains the sole broadband provider available. The company has a strong track record of returning capital to shareholders and investing in infrastructure. With its current discounted stock values, Charter Communications has the potential to generate significant long-term profits. Coca-Cola.
Coca-Cola's been around since 1886. There's 1.8 billion 8-ounce servings of Coca-Cola products sold every day. Now, if you take 1 penny and get 1 penny extra, that's $18 million a day.
Coca-Cola, a renowned non-alcoholic beverage company, has been fueling people worldwide for over a century. Its reliable dividend payments and share repurchase program have consistently added value to investors' portfolios. Warren Buffett, a notable investor, began buying Coca-Cola stock in 1988, making it one of his favorite investments. Over the next 5 years, Coca-Cola plans to invest more than $30 billion in developing markets worldwide. The company's business strategies have succeeded, with notable growth in Thailand, India, and Russia. Investing in companies like Charter Communications and Coca-Cola doesn't require a high level of complexity or a super IQ. It is essential to approach investments with discipline and a solid understanding of accounting principles. Also, gaining insights by engaging with consumers and thinking like a consumer can be beneficial in making informed investment decisions. Dollar General. In certain industries, Dollar General, a well-known chain of discount retailers, offers a wide range of everyday items at affordable prices. With numerous locations across 47 U.S. states, Dollar General provides its branded goods and well-known products from companies like Clorox, Procter & Gamble, Coca-Cola, Kellogg's, General Mills, and others. The company has been expanding to accommodate its revenue growth, evident in the third quarter of 2022, with new store openings and a 6.8% increase in same-store sales, resulting in an 11.1% boost in revenue. Despite facing challenges from rising product costs affecting gross margin, Dollar General achieved an 8% increase in net income during the third quarter. While the annualized 3-year dividend growth rate exceeds 13%, the current dividend yield is approximately 0.9%, which could be more noteworthy. Nevertheless, Dollar General has demonstrated that economic hardships can benefit its growth, as increased foot traffic and transactions are expected to continue if the economy worsens. Additionally, the company has plans to open 1,050 stores in 2023. And with that, we conclude this video journey. As 2023 is still in its mid-stages, you have ample time to consider your finances and to make prudent decisions that can impact your finances. So consider your finances and pick one of the assets or stocks to begin with. If you discovered this video to be valuable and insightful, make sure to subscribe to our channel and explore our other helpful content. Don't forget to tap that like button and hit the notification bell, ensuring you never miss out on any of our latest content. And we generally value your feedback. Share your thoughts and experiences in the comments section below. We appreciate your presence on this extraordinary journey with us today, and we look forward to seeing you again on another investor video.